Hey guys, what's up? This is Trader Goz, and I just wanted to start a quick video series on how to evaluate the markets, understand what's going on, give my thoughts. These are purely my own thoughts, these are not financial advice, but just to get started. So, the first thing is the DXY. This is the dollar currency index. It measures the strength of the dollar with respect to other currencies, a basket of other currencies, predominantly the euro, yen, and the pound. And you can see that from March, the currency has crashed about 10%, 10 to 11% after the corona crash. And this actually means that the valuation of different things in terms of the dollar is actually 10% lower than what we see as a value. In order to put this in perspective, I'll just give a quick thought on the S&P. So this is, I'm using the SPX, and putting that into perspective, the market pre-crash was around that level, and if you want to find out where the top of the channel is going to be, it's going to be somewhere around 10 to 11% higher, because you know for a fact that the markets today is not the same shape as what it was before the crash. So if I'm expecting a blow off top to really be around somewhere around that level, which is around the 3720 to 3750 SPX and 372 to 375 SPY. Now, typically you see on a typical RSI that these trend lines mostly always get respected. So I do expect, even if we see a small bounce here or there, that we see a bounce back up, retest that RSI level and then reject hard. And that's going to coincide with the dollar relative valuation. Now, this is a liquidation hunter candle, which is usually the calm before the storm, or a big move. And so yeah, just be careful out there, and my talk is around that 10% level over the pre-crash levels, if that makes any sense. Looking at commodities, I think the gold needs to put in. So there are some possibilities. I wouldn't short gold immediately. Typically, previous all-time highs do form layers of supply. So we're currently testing the supply range of this level, right? And if this holds, if this supply range holds, I do expect that gold continues its push up, right? And this is completely normal in a bull market. So you have this big bull market, you have the smaller corrective structures which push the market higher, and then you have these macro corrections which work. And typically there's still nothing to be worried about until you break this supply zone, which is around the 1700 level, right? Until we break that and see us like sort of bear market territory yet. So yeah, gold's still for buying. This supply, I wouldn't trade this range, obviously, because this supply zone breaking would lead to testing this supply zone. So I wouldn't trade this range personally, but I think some traders are calling this short gold. I'm just going to hold off on it. Alright. Next, silver. Silver is already in a ranging system. Let it go. If it clears this range, look for the big explosive move up. If it goes here, look for the support level. Simple as that. Don't trade this range, you'll get wrecked. Now let's look at Amazon first, and then look at, so Amazon actually broke the upward look at the daily. Yeah, so Amazon actually broke down and closed below the trend line over which it hasn't closed almost all year. Since the crash, it hasn't closed below the trend line, so I'm expecting that this, even though this looks like a bullish candle, I'm expecting more downside on Amazon, at least in the short term. Okay, let's move to BTC. Now the way I do BTC is a little different, I guess, than others. I usually let's go to the higher time frame. Sorry. The way I look at BTC is a little bit different to the way people usually do it. I usually go to ETH-BTC as a primary driver, and you can clearly see that this is a rejection candle for ETH-BTC. This is a big rejection candle, and whatever you say, this for me is a rejection of this stock, right? So you're looking for a reversal on ETH-BTC, which means you have some options, which is that ETH goes down, BTC goes up, right? The most obvious option. They both crash, and ETH crashes harder, an option. And so these are sort of your primary options, right? So if you look at the ETH chart, this is the last supply zone, right? So if ETH starts this run, BTC is going to actually run harder. BTC is going to run harder. And if I look at the BTC chart, this is my supply zone, which has been respected, below 10k, which has been bought up. So I actually believe that the macro bottom is in for now, even though traders are very bearish and calling for like 6k, 5k, 4k, 1k generational bottoms and so on. This actually looks like a breakout retest to me, which should consolidate and be ready to go. So I expect this. This is already higher. So if I go to a lower time frame, let's go to the 4-hour time frame. I expect this to retest the supply zone. This supply zone, just go here, consolidate for a bit, reject, test this supply zone, and be ready to take off. I don't think that we see something below the supply zone. Even though I know we have the CME futures gap, I know we have all of this, but this is a supply zone which is getting bought up like it's nothing. So that's actually a sign of strength. So I do believe that BTC is going to be in for a run. I would be very, very cautious on ETH at the moment. Even though ETH is being brought back up at the same rate, I would be very cautious because the ETH-BTC looks bearish. Right. Just give your thoughts on XRP as well, and then I'll see how to plan the other streams that I do. So for XRP, it tested the supply successfully. This is the major support which coincides with the fib level, the long-term moving average. I'm just laying off on this until we see the 21 week crossover the 50 week, and that's usually the start of a bull market, and it usually gets supported by those averages as you start the bull market. Alright, so that's where I'm at right now. I'm just keeping it short for this video. Let me know, guys, what you think. How do I improve? And whatever's in your mind, put it in the comments and we can take it from there. Cheers.